QuickBooks Pro Desktop 2021 Cash Flow Projector. Let's get into it with Intuit's QuickBooks Pro Desktop 2021. Here we are in our Get Great Guitars homepage. We currently have the open windows open. You can open the open windows by going to the view dropdown, selecting the open windows list. We're now going to be taking a look at a cash projection. In prior presentations, we took a look at the budgets, the budgeting features within QuickBooks, and we started off the budgeting feature by exporting some reports to Excel, thinking about how to format those budgets, and then importing them into the budget feature within QuickBooks so that we can run reports such as the actual compared to budget reports, which are very nice and useful within QuickBooks. Now, when you think about budgeting, you're usually thinking about like performance, like an income statement, how you're doing over time. Income statement, performance statements are usually best generated on an accrual basis, because that helps us to basically see how we did on an accrual basis without the distortions that cash basis can bring. But of course, then you would also want to know your cash basis kind of projections as well. Maybe make a budget, the cash budget, based on the cash flow budget as well. Again, I think this is something that's useful to do basically outside of QuickBooks in Excel, and then use QuickBooks reporting. Although QuickBooks does have this nice projected cash flow, or projected cash, or cash projector that we'll take a look at now, which is a useful tool. Now, when we looked at the balance sheet, we did kind of project out or think about a way to project out cash. So again, there's a lot of different ways you can think about projections into the future. That's kind of going over the line, or going back and forth on the line between, and there's a shade, the line is not a hard drawn line between accounting and say finance. Finance is typically taking accounting information and looking into the future, or you might say managerial accounting, which is decision-making process, which means you're always looking out into the future. So we do recommend, if you're concerned, if you want to look out this projection type of theory, then you probably want to look at corporate finance theory, and then like managerial accounting for those types of items, which will use financial data, which of course will be in something like QuickBooks. Okay, let's look at this feature. We're going to go to the company dropdown. We're going to go down to the budgeting and planning. And this time, instead of looking at the budget, we're going to look at the cash flow projector. The cash flow projector. This goes through a little worksheet tool that can kind of help us to step through the cash flow projection, give us a little workflow, as you can see up top. So it goes through like a questionnaire type of thing. Cash flow projector reads your QuickBook data to project and model your cash flow. Create summary of your cash flow requirements for the next 6 weeks by calculating and projecting cash on hand, income in cash, business expenses, and accounts payable. So it'll try to take the information that's in your QuickBooks system and make some projections into cash. How does it do this? How can we think about that? Well, notice the difference between cash and accrual will have to do with things like accounts payable and accounts receivable oftentimes, right? Those things that are on the balance sheet, typically current assets and liabilities. And we have set up terms oftentimes, and you will need to set up terms in order for this to basically work, saying when do we expect payment from basically customers, and when do we expect to be making payments on our payables. So those accrual kind of concepts that we have on the books, accounts receivable and accounts payable, can be used to make projections in terms of a cash basis as opposed to an accrual basis, and help us to kind of think through where we might be in the near future with regards to cash. Now, these are just going to be resources like a sample cash flow. So this is a sample that you can kind of review to see what to expect. This will take you to the help area, and this one will take you to the help area as well, but it'll list out what you need. So let's take a look at that one. To prepare a projection that is accurate and useful, make sure you have entered all your transactions, such as bills, payments, and deposits. So you want to enter your transactions up to the current point in time to make the most accurate cash projections into the future, including those things like bills, which are going to be some of the timing differences that you may have. No memorized expense transaction information, including amounts and frequency of payments. To see a list of your memorized transactions, go to List menu and click Memorize Transactions. So if you have memorized transactions that are going to be recorded periodically, and they have an impact, of course, on cash, then it can make predictions based on those memorized transactions as well. Know any adjustment amounts you want to make to beginning balance, cash receipts, business expense, and your accounts payable. So I'm going to close this back out. We're going to go ahead and continue. Check each account you want to use for calculating your beginning balance, then enter any adjustments to the balance. So I'm going to say checking account and the undeposited funds. Now, unfortunately, we're working a practice problem that's kind of in the future right now. So it doesn't give me my beginning balance because as of this day, there's no data entered into the system. So what I'm going to do is I'm going to open up the balance sheet and then enter the beginning balance. So you should have, of course, the beginning balance as of today, which this practice problem, I'm working it basically in the future in terms of the QuickBooks data, so there is no beginning balance. So I'm going to put it in there. I'm going to go, all right, well, let's go to the reports, slight adjustment to the beginning balance here. I'm going to go to the company and financial, open up the old balance sheet, change the date to 02/28/21, pull out the trusty calculator. So let's pull out the trusty calculator, the huge calculator. It gets excited when you pull out the calculator. 504, 108. 505, let's say, plus, and then I'm going to pick up the undeposited 1500. All right, that looks good. Let's bring it back over to the cash flow. We're going to say adjustment 110005. And then, so we're going to say, let's say next. And then it says choose a method for projecting your cash receipts and add any additional cash receipts. You can also manually adjust your sales receipt summary. So then we have our options down here. And again, if you have everything populated, this would look a lot different, right? We'd say, because again, as of the point in time of today, there's nothing in the system. It's in there basically in the future in our practice problem. But you can use the last 6 weeks, use an average of the last 6 weeks, use a weighted average of the last 6 weeks. So, weighted average and average, a difference in terms of the weight, the way you're going to be calculating the average. And then same 6-week period last year, or the average of same 6-week period last year. So we don't have any last year data. All we have is 2 months that are in the future. So you could say that you want to have to project manually. If I just take a look at the different ones, we'll clear all values. That's okay. Here's what we have. We have the projected receipts, and so on and so forth. For use last 6 weeks, use the average. If I use the average, here's going to be with the average and projected receipts. Again, it's going out to November. Our data hasn't been input until January 2021. So let's put a couple transactions in place here. So let's just put in some manual transactions since we don't have any data in it. So I'm going to say 100720. Let's put this 5,000. I'm going to say 101320. Let's say 2,000. Let's say we have 101820. And let's say that's going to be 3,000. And then we've got 102620. Let's say 7,000. 11,920, and we're going to say that will be 8,000 and 11,1820, and we'll say 1,000. And this first one was 10,0920. So there we have that. 11,120. Got 2020, 11,120. So there we have that. And then down below, we can make adjustments. So again, normally you probably would try to be pulling this data from one of these options down below to do a projection to this cash projection. And then if you know about any transactions that need to be manually input that aren't in the system or be within the system in any place, then you can make those adjustments periodically for the period of just basically the 6 weeks, just the 6-week time period. So I'm going to say next. Now we're on the expense side of things. Choose an existing account or type an expense description and enter any non-accounts payable business expenses. You can enter detailed expenses or a summary of multiple expenses in a single row. So we can, and again, we don't have anything set up in terms of the expenses, in terms of like an accounts payable for the expenses, so we can manually input the expenses here. So the type of expenses we might have, or something like utilities. Let's say the frequency would be, it's going to be the date and then the frequency, one time, weekly, semi-monthly, let's say monthly. And then the amount, let's say, is going to be 70. And then I think we can put inventory in here, inventory assets. And let's say, let's put this one in as 10 1920 and say, let's make this monthly as well. And let's make it 2000. And then we'll say telephone. Let's make this 2620. And we'll make this monthly. And this will be, let's say, 150. And then we'll have office supplies, maybe. Office supplies. We'll make this 10. Let's make it 110220 monthly. Let's say monthly, and that's going to be 300. And then let's say, I think there's an internet expenses, and let's say this is going to be on 1620, and let's say monthly, and let's say this is 180. Okay, something like that. And again, you can have the adjustments here as well. So you would like to be having this in the system. If there's something in accounts payable or whatnot, it can help you to generate that, or else you can basically budget your expenses. Here we're talking about the expenses that would actually be being paid. So if they run through the accounts payable, then you want to be taking that into consideration and then make any adjustments. If you had any like one-time adjustment that you think needs to be in there, then you can obviously add the one-time adjustment. So we'd go next, and then it says review your unpaid bills and adjust any payment dates as necessary. You can also manually adjust your weekly accounts payable summaries. So now this is in the accounts payable. So now this is the area where if they're running through the payables and you currently have them in the system, then your due date will be here. So it'll be picking up your payable. Now we only have one, and again, it's in there in the future, so it's not affecting us at this point in time. But again, the accounts payable and the accounts receivable are those types of things that kind of could help you out. If you have a lot of accounts payable or accounts receivable and they're in the system properly and you have due dates for them, then this tool can help you to basically even out that and do a cash projection, or at least a fairly short cash projection into the future. So really nice tool if you're just running it, like what it's doing 6 weeks into the future, and you're trying to figure out basically where your cash will be based on what you have, based on when the due dates are within the system. So then we can finish the projection here, and this is the type of report that's going to be generated from it. So we've got the current week, we've got the cash beginning balance, we've got the receipts, any adjustments. Here's the total cash, business expenses, cash available for disbursement, for payment. And then accounts payable, nothing's in the accounts payable. So here's the ending cash. That's, of course, the beginning cash. Once again, this is a standard kind of cash flow budget. This is something you might do like in Excel. And so this tool could help you to make a cash flow budget. I still think it would be, if you want to, really mull it over, you do it in Excel. But in any case, this tool could be a useful tool, especially, again, if you have a lot of payables and receivables that you want it to sort out, right? This could, even if you're going to do it in Excel, this tool might help you to sort out at least that component of it, right? That component related to the payables and receivables, which would be really nice. So then we got the beginning balance and the cash receipts, and then here's our total cash, and then the expenses at the 70, cash available for disbursement, and then ending cash balance. And then, of course, that's our beginning cash balance for the next week. And then we have the cash receipts, the total cash. Here's the disbursements, and that leaves us with the ending balance, the beginning balance then for the next time period, and so on and so forth. So, useful tool. I think it's somewhat limited in terms of, if you're really doing a detailed cash projection. But again, if you're doing a detailed cash projection and you want to know, at least in the short term, what the effect of the accrual accounts are, the main accrual accounts, receivables and payables, then this tool could be useful for that.